the prevailing tight global financing conditions and further policy rate hikes in advanced economies continue to pose risks to the external outlook. Headline inflation surged in April 2022, and both headline and core inflation have stretched further above the upper limit of the bank's medium-term target band. The heightened uncertainty surrounding the inflation dynamics has weighed heavily on the domestic environment and significantly depressed business and consumer sentiments. The inflation numbers show that while food inflation has accounted for the increases in inflation over the past year, the recent jump in April shows that relative price increases in the non-food sector is accelerating at a fast pace, which provides information on the extent to which prices are becoming embedded. The bank's latest forecast shows a continued elevated inflation profile in the near term, with a prolonged horizon for inflation to return to the target band. Inflation expectations by consumers, businesses, and the banking sector have also heightened. The risks to inflation outlook are on the upside and emanate from the availability of inputs for food production, imported inflation, continued upward adjustments in export petroleum prices and transportation costs, possible increases in utility tariffs, and potential wage pressures. The second round effects of these administered price adjustments would further amplify inflation pressures in the outlook. These considerations show that with a strong rebound in growth and the closing of the negative output gap, the balance of risk is clearly on inflation. The MPC took the view that it needed to decisively address the current inflationary pressures to re-anchor expectations and help foster macroeconomic stability. On the basis of the above assessment, the committee decided to raise the policy rate by 200 basis points